What's going on, everyone? Charles Moon here, and I am the stock strategist with Prosper Trading Academy, and I'm here to give you an introduction to penny stocks. Now, penny stocks can be kind of categorized in two separate venues or avenues, right? Most people tend to think they're OTC or over-the-counter stocks. They're pink sheets. They're extremely risky. They're dangerous. They're pump and dump type names. And, for me, that's certainly a subcategory of what penny stocks are. I generally categorize them as small caps or micro caps that are listed on the exchanges, most notably the NASDAQ exchange. And they're generally under $10. And most notably, they're growth names, right? Hyper growth names. So I want to make sure that we kind of kill the, faux pas idea or the thought that, penny stocks are generally extremely dangerous. Certainly if you buy them at certain levels after they've made some extreme moves, they can be, but that's something that you're just going to have to kind of learn not to do, right? Don't chase after the fact. Now, if you want to find what stocks have great opportunities or what penny stocks have room to run and move, or that is drawing the general interest of the public right now, you should be using websites like Facebook, like Twitter, like StockTwits, even FinViz, where you could run your own scanner and see what stocks are performing better. All in all, what you want to see is where the retail demand, where the retail interest is coming in. And that's how a lot of these stocks can pop on your radar. You don't have to go and sit here and do, hundreds of hours of research on one specific equity. Ultimately, you can start broadening out, seeing what is moving, create a watch list, and keeping your eyes on these names over time. But if you're hunting for the mover of the time, as in right now, what is moving on the now, social media is always a great avenue. Just look and see what is trending in the near term. So for me, where I look for value, I actually look for trend reversal opportunities or stocks that are basing on lows. Basically, they found a floor or a bottom and they've settled and started going sideways. Usually when stocks start posing this, floor that's in play, it's saying, well, the market is telling me right now that the stock isn't going to move lower, and then it's just holding. And when a stock starts holding, it actually ups the odds that they're going to actually rally back and start coming back to life. So, these are the two factors that I'm always looking for in terms of opportunities with penny stocks. I'm never really trying to chase after a mover that's been up, 200-300% over a day or two, because that's how you could actually buy the tops and end up getting stuck as a stock starts to retrace. This is where a lot of discipline is going to come in, a lot of patience is going to come in, not to try and chase after that opportunity, but to be patient for the market to come back to you and then buying in at value. As a trader and as an investor, this is an important component to your success going forward. Now, if you do choose to trade those tops or those peak values, I only encourage you to do something what's called nail and bail. Get in, get out. Listen, even if it's $40, $20, $100, listen, getting greedy at those levels is going to be a major detriment in your trading career going forward. It'll lead to bad habits, and more importantly, it'll start messing with you psychologically, which again is going to be an important factor as a trader, because winning breeds confidence, right? Losing does the opposite. So think about that. Think about where you buy. And again, if you find these value plays, you're putting yourself in a position for great success. Low risk values, high reward parameters. That is the absolute best way to approach these pennies. Now, personally, for me, I like to actually approach these types of stocks from a trading standpoint. Now, as an investor, certainly you are going to have to do your due diligence. A lot of these names are biotech names. They're in, clinical phase 1, phase 2, maybe even phase 3 trials. And ultimately, you're going to have to look at the FDA calendar, know when their possible, FDA decisions are going to come into play. But, if you do enough research and see what these companies are offering here in the long run, certainly that's where the investor idea comes in. Now, as for investor traps, a lot of the time traps could come in from analyst upgrades. I only recommend following these upgrades if they're coming from a institution of value. Let's say Citibank, Morgan Stanley is a great one. Goldman Sachs, JP Morgan. The ones that I would actually tell you to shy away from is H.C. Wainwright. Now, this is a pretty large firm, but they're a firm that's known for collectively holding millions of these penny stocks, and their upgrades tend to be based on where, maybe the insiders want to sell on a rally. So I tend to shy away from HC Wainwright upgrades and look for more of the the Wall Street institutional bankers giving these stock upgrades. And again, as an investor, you're always going to want to buy in at the greatest value, which leads me back to that basing pattern where stocks are kind of hovering near their 52-week lows. Again, lower risk values, great reward opportunities. And for me, from a trading standpoint, I look at it the same way. I'm not married to any names because there's so many opportunities out there. I like to spread it around, and I like to look for momentum and volatility, and that's my specific approach. I love breakout opportunities. I love bounce plays, and that's how I specifically go after these micro cap names. Now, there is actually something known as pump and dumps that I want you to be aware of. A lot of these micro caps also have smaller floats, which allows these stocks to actually move up very, very quickly in price. And when we're talking about price movement, we're not talking about 10% gains, 20% gains. That's huge when we reference names like Facebook and Apple. But when we're talking about micro caps, a dollar stock making a 20% move, it's only 20 cents. It's when these $1 stocks turn into $8 stocks, $9 stocks, that we're actually seeing a loaded risk play. And what I mean by that is that this stock, you could end up buying at that $7, $8, $9 range, and all of a sudden it comes back down to $1, and it happens very, very quickly. So the idea of the pump and dump theory, really what pump and dump means is that a lot of these names will move on news. They need a catalyst to kind of bring life and bring new interest into the stock. And so the news will come out, and then a stock will make an offering. The offering is that they're trying to raise capital based on the price movement in a short period of time. They flood the market with shares, and it's usually way below where the stock is currently trading. Hence the fast drop in the stock price, or the dump. So you do have to be very, very careful, because these names will make very big parabolic pumps, and then of course the retracements will be just as big. Remember, guys, if a stock can move $3, $4 to the upside, it could also move $3, $4 to the downside. So it's really important that you know where you're at, know your situation, know the situation in terms of the pricing levels that you are buying, where it came from, where it went to, and also understand that a lot of these moves could be short-lived, and sometimes that's the attitude and approach that you have to take, both as a trader and as an investor. Guys, if you like what you heard, do me a favor, like, comment, and subscribe. Hit that notification bell. Guys and gals, down below, let us know what else you want us to talk about, what you want to hear, what you want us to break down. Peace and love, everyone.